Hello everybody and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities sector. On this episode, I'm joined by Porter Stansberry, the founder of Stansberry Research, where he predicted the collapse of GE, GM, Fannie Mae and Freddie Mac, along with debunking peak oil back in 2006, shortly before the shale boom in the US. He is currently the founder of Porter & Company and the author of Porter's Daily Journal. We're going to get his thoughts on the overconcentration of a handful of stocks driving the S&P 500. How long can this trend continue? We're going to discuss the BRICS versus the West narrative, including Trump's recent announcement of an external revenue service. We're going to talk gold and silver and where he sees both metals headed in 2025, and a whole lot more. Strap yourselves in for my conversation with Porter Stansberry. Porter Stansberry, it is great to have you on Commodity Culture. I want to ask you a question that I ask every guest the first time I have them on the show, just to get an idea of where their head's at when looking at the macro picture, and that is, what are the main themes and trends that you're currently watching when it comes to markets and the economy that you think more investors should be paying attention to?
For me, it really boils down to one thing and one thing only, which is the fact that the largest, most important economy in the world, the United States economy, has completely come unglued in regards to its government finance. Government at all levels in the United States is now 40% of our GDP. And I don't know if you saw the most recent data, but in the first quarter of our fiscal 2025, the federal government has already run almost $800 billion deficit in the first quarter. That puts us on track for just an unprecedented level of deficit spending, which we also had last year, and a period of full employment, and in a period where tax receipts have soared over the last 5 years. And what I think that means is that the basic underlying fraud of the welfare state is coming unglued in the United States. You see that also happening in Canada. You see that also happening in Great Britain. You see a similar but technically different version of that unfolding in much of Western Europe, where the idea of clean energy has resulted in essentially deindustrialization of Germany in particular. All these things, they in my mind, they portend a sea change in the way that the state is going to interact with the economy going forward. And you see that Trump has promised to roll back this collectivism, and it'll be very interesting to see if he's able to do so. I don't believe he will. His most recent promise was that he was going to create a Bureau of External Revenue. And it was interesting to me that so many of his followers cheered the idea of creating yet another federal bureaucracy to generate revenue. And I just don't think it's occurred to people yet that the problem in our economy is that the government is way too expensive. There isn't a free market that can afford 40% of GDP government for very long. And creating yet another way of raising federal revenues is unlikely to increase the dynamism of our economy. It's more likely to lead to lower economic growth, more federal deficits, more federal debt, more inflation, less efficient economy, and more poverty. And so I think that as the world turns away from the dollar as a world reserve currency, as central banks all around the world buy gold, and as many individuals try to hedge in Bitcoin and other monetary assets, real estate, for example, has just gone crazy in price. You're approaching the 0 hour where the world really grinds to a halt. And you've seen that occur in Germany. I think you've seen that occur in Canada. I think you're very close to that point in Great Britain. And I don't think many Americans think that will happen here, but I suspect that it will.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. There is very much that white knight syndrome when it comes to Trump getting elected. I think people in Canada are looking at Pierre Poilievre in much the same way, that this person is against the establishment. They're going to come in, they're going to solve all the problems. It's kind of insane listening to Pierre Poilievre in particular talk about, oh, my constituents come up to me and they say, you have to win because I'm working 3 jobs just to make ends meet. And he's talking about it as if he gets elected, that person will no longer need to work 3 jobs to make ends meet. I don't think it works that way, but I do want to hone in on Donald Trump's External Revenue Service, as you mentioned. He announced this recently to collect, quote, tariffs, duties, and all revenue that comes from foreign sources. This now adds to a long list of economic threats he's made to other nations, including sanctions against anybody who wants to work outside the US dollar, sanctions against Canada, saying he's going to take over the Panama Canal and Greenland and make Canada part of the U.S. Is this all just negotiation tactics in your view? Will he actually follow through on these threats? And if he does, what will be the end result?
I can't know the answer to that question. I have spent time with Donald Trump at Mar-a-Lago. In person, he is very warm and very intelligent. I held him in high regard in real estate and, of course, in communication. He's a genius, when it comes to communicating to the American people and finding a way to rally them and get them on his side. When you think about the fact that he's most popular in less educated rural communities throughout the United States, and yet he is a New York City land baron. I mean, that is really a remarkable political accomplishment. It reminds me a lot of Theodore Roosevelt from American history. Same thing, very wealthy New Yorker, beloved by the common people. He's a genius politician. I can only hope that the things that he is saying is political bluster and will not be acted upon. But I can tell you this, if Trump were to enact a broad 25% tariff on all trade with the United States, the purchasing power of the dollar would fall by 50% in the next 9 to 18 months. It would be a horrific outcome for average Americans. Most people really do not understand the incredible advantage that America has had because of the role of its currency in global trade. For the last 50 plus years, Americans have been able to get anything they want in the world in exchange for a piece of paper and a little bit of postage. And when I say postage, I mean shipping costs. We have bought energy from around the world. We have bought labor from around the world. We have bought finished products from around the world. We have bought raw materials from around the world. We have bought accounting services from around the world. You know, I was in New Zealand over the holiday break, and every other building in downtown Wellington is an accounting firm, because it's been vastly cheaper for most companies in the United States to offshore their accounting work to places like New Zealand, where the dollar is extremely strong and there is a very educated class of people who speak English. And this has gone on in all kinds of ways. All of the customer service outsourcing to India, all of the textile manufacturing to Southeast Asia. Look at the price of televisions. If you want a great example of why free trade is important, The price of televisions has fallen by about 99% ever since China joined the WTO. And that's because the Chinese were happy to work for our paper script. Getting rid of that will not help America. it's as though no one has ever heard of financial history. No one knows the history of the repeal of the Corn Laws in Great Britain or any other place where free trade has been tried. And for someone like me, who is an avid financial historian and who cares deeply about my country, it's frightening to see an entire cadre of leaders that are espousing policies that will be incredibly destructive. And the other thing, and I don't mean to go on too long, but the other thing that's so scary about a tariff regime is it puts not some of the political power in Washington, D.C., because with income taxes, there's a range of shelters. There are things like 1031 exchanges. There are ways of sheltering some of the civil society from the impact of income taxes. For example, religious organizations don't have to pay them. Not-for-profit organizations don't have to pay them. There's still a way to keep civil society out of the hands of government. But with a tariff regime, every entity in the entire country is subject to the regime. There are no exceptions. And therefore, every industry in the entire country will have to go to beg to Washington for the appropriate levels of protection. And that will not make our country better. It will make Washington, D.C. better. And if you already know what the property prices are around the 6 counties that surround D.C., you already know that area of our country is already 5 or 6 times too powerful relative to the other places in the country. What we need is less government, period. We need less government in the United States. We need less government in Canada. We need less government in Germany. We need less government in Great Britain. We need for the West, which is supposed to be the land of the free and the land of opportunity, to actually be these things. And when you spend, as an American, and I think it's probably worse for Canadians, but as an American, you spend your entire life paying marginal taxes of between 45 and 55%. Call it, when you add in everything, sales taxes, state income taxes, federal income taxes, surcharges, Medicare contributions, Social Security contributions, when you add up everything, you spend about half of your income at least on the government during your lifetime. And then when you die, they take the other half. This is not the land of the free. And then, of course, in America, unlike Canada, we have global taxation. So if you don't like the regime, you can't just leave. And most Americans don't know this either, but when the so-called Patriot Act was passed, which is just the most Kafkaesque name given to a law in my lifetime, when the Patriot Law was passed, they took the exact same exit tax that the Soviet Union had used for 80 years to enslave its population, and they implemented it in the United States. The exact same law. Again, most Americans don't understand any of this, and probably most of them don't care because they think, well, why should we make it easy for rich people to leave our country? And the answer is because if the government has to be competitive globally, it will be a better government. The idea is not that you want to make it easy for rich people to leave your country. The idea is that you want to make it attractive for rich people to come here. And that's how you build wealth. One last example. If you look at Ireland, when I was first getting into the financial research business, this is 30 years ago, Ireland was the poorest country in Europe, the poorest. It was poorer than Greece and Portugal. It was the poorest place in Europe, and it was ossified. It was essentially controlled by the Catholic Church. There was zero social freedom, and there was zero financial freedom. And in my career span, not my lifespan, in my career span, Ireland has become the richest country in Europe, and it is a far richer country than even the United States in terms of per capita GDP. It's also a much freer place. The marginal tax rates in Ireland right now for most people are between 12 and 17%. There's a reason why there's an exodus of Irish people from America back to Ireland, reversing a 200-year trend. And I don't expect it will happen in my lifetime, but I certainly hope that there will be some real regime in Great Britain and United States and Canada and Europe that begins to embrace the principles of sound economics and free markets and free peoples. But even the Wall Street Journal, which has long been the leading voice of free markets and free peoples, even the Wall Street Journal now reads more or less like a woke large government paper. It's for me, it's been a disheartening transition over the last 25 years.
Yeah, and you're preaching to the choir. I left Canada to relocate to Serbia, where I now am, to get away from government interfering in my life and to get away from insane taxes. And I've also heard of a lot of people from former Yugoslavia who moved to Canada now coming back here because they're starting to see a lot of the same kind of extreme socialist policies that existed in Yugoslavia when it was a communist empire, and they want to get away from the madness. Now, I want to talk about that shift that's kind of happening in the West with governments moving more and more towards kind of a soft totalitarianism, if you could call it that. Places like the UK and Germany where citizens are getting thrown in jail for making certain types of social media posts. Places like Canada where citizens' bank accounts were frozen if they dared even support financially a little bit a group of people that did not go along with the government status quo, which is quite a shocking development that people don't talk enough about today. It's kind of been swept under the rug, but it's completely insane. What is going on here? We're seeing this across the EU as well, the push for more and more censorship. The EU threatening Elon Musk that if he dares interview somebody from this political party, he's going to be in big trouble, so he'd better do what they tell him. It's completely nuts. You had the one guy from the EU, Thierry Breton, I don't know his exact name, but he was basically openly admitting, see what we did in Romania, where we reversed the election, where we canceled the election. We're ready to do that in Germany if necessary. So it's become a strange dictatorship where now the EU gets to decide, well, this government's not really far left enough for us, so that election wasn't valid because of Russian interference or because of social media posts or whatever reason they want to make up. They're kind of becoming the very thing they claim to be against. And they claim to be protecting democracy. And it seems like so many people are asleep, the citizens of these countries. When things got crazy in Canada, across the board, people supported it. They either supported it or just kept their mouths shut. And I think a lot of the same is happening in the EU and places like the UK today. What are your thoughts on what brought us here? And will the pendulum swing the other way in your view?
Well, I'm not sure that my answer will make sense to anybody, but I have a view about this that I haven't heard anyone else espouse. So it may just be wrong. But my view about all this is the more power that government accrues in society, the more radical it will inherently become. If government is the most powerful single institution in your society, then people are going to be willing to lie about it. They're going to be willing to become violent about it. They're going to be willing to break the law to control it. It becomes, if you will, the ring of power, the institution that binds them all and controls them all. And when that becomes the case, then politics can become a real blood sport. And then, therefore, in a democracy, the way that you control the government is largely by controlling the media, because it's so funny to me the way that people believe they get to decide who they vote for. They don't decide who they vote for. The media that they subscribe to decides who they vote for. People are extremely subject to the influence of media. And as someone who runs a publishing company, I can tell you all about that. You get manipulated all the time by the media. So I think that the only way you're going to have government that agrees to be civil and to play by the rules is if you can find a way to simply restrain it. It can't. It is very bad for everybody when government becomes the most powerful institution in the country. And when that happens, you're going to have a country that becomes dominated by violence because, as I'm sure you realize, politics is something that is done at the end of the gun. And the more you allocate resources according to violence, the less efficient and the less free your society will be. And it doesn't matter whether your government is quote unquote a democracy or not. It doesn't matter. All government functions through violence. And what you want in a civil society is very little violence. You know, if you look around at countries where the government plays a very small role in the economy, you'll see countries that are very free. And where you find countries that the government dominates the economy, you'll also see that there's very little civil society, there's very little civil rights. And even where there are supposedly civil rights, what really happens is the government does whatever it wants and nobody says anything. The best example of that is in the United States, the government's actions during COVID were utterly totalitarian. They violated every single social norm that we have in American history. They violated pretty much every plank of our entire Bill of Rights. We lost the freedom of speech. We lost the freedom of the press. We lost the freedom from search and seizure without probable cause. We lost equal protection of the laws. And the violations were black and white and blatant and obvious. And every time somebody took a local authority to federal court over civil rights violations, they lost. And the judges just said the laws don't matter when there's an emergency. Well, that's not what the Constitution says. The Constitution doesn't have a clause that says these laws don't apply in an emergency. It doesn't have a clause that says these laws don't apply in a time of war. We were supposed to be a nation of laws. What happened? Well, you know what happened. It was in the best interest of the political leaders that Moderna and Pfizer and everybody else make an absolute killing. And so the rest of us got completely fucked. And that's why you can't have a government be 40% of GDP. If you do, you won't have any freedom.
Yeah, some very good thoughts there. I want to shift to discussing financial markets for a moment, because there was a tweet on X by the account Unusual Whales where they reported that the 10 largest stocks in the S&P 500 now represent nearly 40% of the index's market cap. You replied, "This is fine, absolutely nothing bad. It is likely to happen to these nothing bad is likely to happen to these wonderful businesses. The largest stocks in the index always outperform." I certainly sense the sarcasm there. Give us your thoughts on this small concentration of stocks being so heavily weighted and how you think it will play out.
Yeah, okay. I'll just tell you though that the language in question, X or Twitter is a very unique form of speech. And you have to convey a lot of information in a very short number of words. And sarcasm is a wonderful way of conveying that. And so anytime my tweet starts with "this is fine" or "this is perfectly normal," your red flag should go up that Porter's clearly being sarcastic. Yeah, so obviously you know the markets very well. I'm sure most of your viewers do too. Historically, the largest member of the index does very poorly over the next 10 years. So one of my most famous calls as an equity analyst was about General Electric. General Electric, by the year 2000, which was about a year after I launched my newsletter business, General Electric was the largest publicly traded company in the world. It had a market cap of $500 billion. And it was an extraordinarily popular and widely held stock. Its leader, Jack Welch, was the most heralded, acclaimed business leader of the previous 30 years. And at one point, GE stock was trading at 50 times earnings. So the largest stock in the index is trading at a multiple that is impossible to fulfill. And the entire business community has become completely brainwashed that Jack Welch's formula, which, by the way, was to manipulate earnings, to borrow tons of money, and to buy back shares. So in other words, financial engineering around a very large, very low margin industrial concern was now worth 50 years worth of earnings. This was very obviously a ticking time bomb. And when I say low return on assets and generally a weak business, I'm pretty sure that between 9/11 and the company's final collapse in 2017, GE never earned more than 2% on its assets ever in a year. So, and, GE would have been better off selling all of its assets and buying treasury bills. But somehow, because, magic, an asset that is the business of returning 2% on assets is worth 50 times earnings. And sure, what happened next at GE? The next CEO, whose name just completely escaped my mind at this moment, but I've written about him for 2 decades. He gets all the blame because he got caught with his hand in the accounting cookie jar. He stupidly continued that playbook long after it had failed. So even after 0809, when the government had to come in and guarantee all of GE's debt, Immelt was his name. Jeff Immelt kept the same playbook. He went and bought this giant European power company because he knew how to manipulate the power service contracts to generate earnings even without cash flow. And he kept at this game. He also did a bunch of crazy stuff in insurance, which I won't bore you the details with. But anyways, my long point is, for about 20 years, I would write consistently about how GE was lying and how GE was going to fail, how GE was going to blow up in an accounting crisis. And nobody believed me. I mean, I got such great hate emails from subscribers over this period of time, what a moron I was and all this stuff. And my point about all of this is people's emotions are expressed in equity multiples. And people were emotionally completely blinded by the bamboozle at GE, to where they believed that a company that was actually worth maybe 6 or 7 times earnings was somehow worth 50. And that just shows you the depth of the delusion and the depth of the magical thinking that the market had adopted. So generally speaking, whoever's stock is so incredibly overvalued that it becomes the largest in the S&P because it's market cap weighted. Generally, those beliefs, those magical beliefs, are destined to lead to disappointment over the next decade. And so GE went from being the largest company in the index to 10 years later not being in the index. I don't know what will happen to Apple. I don't know what will happen to Nvidia. I don't know what will happen to Meta. But what I do know is that it's very unlikely in a business that is as competitive and as cyclical as semiconductors that Nvidia will turn out to be worth 50 times peak earnings. And so all I have to do to avoid a whole lot of heartache is look around the world for high quality businesses that have not become part of this mania. And so a friend of mine, David Lashmet, who's a brilliant technology analyst and was actually my first hire when I started Stansberry Research, we sat down last week and spent about a week looking around the world for super high quality companies that have not participated at all in this mania, but that have all the attributes that the Mag 7 have. And so we found, for example, Nestle. Nestle is now trading at 15 times earnings. It's gone down almost 40% this year because everyone's convinced that GLP-1 drugs mean that people are going to stop eating chocolate. I think they're likely to be wrong. And I think that buying one of the greatest businesses in the world at a reasonable price with a 4% dividend is very likely, meaning 90% likely to outperform the Mag 7 over the next decade. I feel the same way about ExxonMobil. Now, ExxonMobil isn't a foreign stock, and it is part of the S&P 500. But for the last decade, investing in fossil fuels has been verboten. And so you have here the absolute best managed company in the entire history of capitalism that's trading at 13 times earnings and paying a 4% dividend. Again, very certain that will outperform the Mag 7 over the next decade. And my friend, David Lashmet, who really specializes in medical stuff, he points out that Roche and Novartis are very cheap relative to their US counterparts. And I've got one for you. This is extremely unpopular, but I have a feeling that Sony will outperform Apple over the next decade. So Apple took its entire business model and designed it around Sony's business. Steve Jobs was enamored with Sony and wanted to create beautiful products the way that Sony had. And man, Apple has kicked Sony's butt for the past 30 years. But Sony has even more expertise in microchips than Apple does. Sony has an incredible video game business, which is a huge growth area. And Sony has the capability and the brand to make products that are very competitive with Apple. And so I don't have any special insights, but I think that Sony trading at 16 times earnings is a much better investment than Apple, which hasn't grown revenues in 6 or 7 years, trading at 30 times earnings. And that's not to say that I'm not saying that Apple isn't a great business. I'm just saying that price really matters to investors. And this idea that only the Mag 7 are worth investing in is a massive delusion and will be revealed as such in time.
I'd love to get your thoughts on gold and silver and also the mining stocks as well. A lot of people are pointing to a gap in valuation between gold, going to all-time highs, and the mining stocks, which many believed would take part in a sort of mania, people see them as a levered play on the gold price. And it hasn't really turned out that way. I mean, even looking at the majors like Barrick and Newmont, they're not anywhere near their all-time highs. There's been some outliers out there, Agnico Eagle. But largely, the gold stocks in particular haven't performed up to people's expectations. So I'd like to get your overview on the gold and silver space in general, and maybe your thoughts on the gold mining space as well.
I can tell you this, that over the next decade, a lot more gold and silver will be mined. And I can also tell you that mining is a very tough business. It's very capital intensive, and it's very subject to political problems. So I don't expect those stocks will ever trade at very high multiples. I suspect that if you want to be successful as an investor in a mining business, that you have to be prepared to pay, you'd only want to buy at a big discount to net present value. And you're really better off if you can invest only in the companies that are the so-called streamers. So, ExxonMobil, me recommending an integrated commodity-based business is very unusual. ExxonMobil is a very unusual commodity-based business. It's exceptionally well run. It has very high returns on invested capital. It's a different animal. It's a much higher quality animal than average. I suspect if you look at the return on invested capital at most of the integrated mining companies, you'll find very, very poor numbers. And as an investor, I believe completely, that your job as an investor is to find assets that can produce high returns on invested capital. That's your whole job. If you look at Franco-Nevada, you'll find that. If you look most places in the mining business, you won't. And so, in general, I haven't invested in integrated mining companies throughout my career. I do think that the streaming model is a fantastic model, and one of my best recommendations, one of my best ideas for a long time has been Venom, which is the oil streaming company that owns a lot of assets in the Permian Basin, which has just been a home run. On the other hand, I have recommended for several years now a business called EQT. And EQT is a very old American company that was the first business to set up a city gas light network, and this was in Pittsburgh. So they piped in natural gas from the oil fields that were nearby in Titusville, and they set up a city gas company where they brought energy to the people and lights to the city, and that was in the late 1800s. And EQT's been around for that long. It was taken over in the late 20-teens by these two brothers, the Rice brothers, who owned a small energy business called Rice Energy. And they got acquired by EQT, and then they had a proxy fight and took the company over. And EQT then bought $8 billion worth of proven natural gas reserves in the Marcellus Shale from Chevron for only about $750 million at the very bottom of the COVID commodity panic. And they're going to be, EQT is going to be having returns from that incredible investment for the next 3 decades. They'll be monetizing that incredible acquisition for a long time. So that is a case where you can buy an integrated commodity business where you can get very high returns on invested capital, but only because the leaders of that business were just rare geniuses and they were able to buy such an incredible asset at such a low price. When you can find that, you've got a chance. Otherwise, I would caution investors to always understand what the likely returns on invested capital are in that business. And that generally means you're going to avoid integrated commodity businesses.
So it sounds like you're not too bullish at the moment on mining companies, on commodities, the commodities extraction business in general, which runs counter to a lot of guests I have on this show that are very, there's a lot of talk of a commodities supercycle. We're going to see a rotation from these overvalued tech stocks, as you were speaking about earlier. And when that, the broad indices fall, capital is going to rotate into hard assets. Commodities business has been very underinvested in for some time now. The amount of capex being deployed is nowhere what it used to be. There's all sorts of signs that people look at, both from a fundamental and technical analysis, to show, hey, the mining sector across the board, commodities across the board, are tremendously undervalued. I wonder what your thoughts are on the commodities complex as a whole. Do you see this commodities supercycle on the horizon? Is that hyperbole? What are your thoughts?
Unfortunately, I can only repeat what I just said in the previous question, which is most commodity producing businesses are just very poor businesses. They require a lot of capital. They have very low returns on those assets. And as a result, it's very difficult as an investor to do well in them. The exception to that is when you can buy a dollar for 20 cents, you can do well, even if it's in a commodity business. So the only time I would be interested in commodities is when somebody taps me on the shoulder and says, "Hey, this just fell 90%." Then I can take a look at it. The other thing that I will say about this is commodities in my career have done very well on one occasion, and that was out of the bottom of 1998. There was a whiff of deflation because of the Russian default in 1998, and a lot of people who were levered had to sell, so there was a whole bunch of forced selling, and commodities got very cheap. And Rick Rule is an old friend of mine, and he had a partnership that was buying up uranium at pennies on the dollar. And those guys made an absolute fortune on uranium from the bottom of 98 through about 2007. An absolute fortune. And there was a big run in commodities in general from the lows of 2000 roughly to the peak in the summer of '08 when oil touched at about $150 a barrel. But I'll tell you something interesting about all that. By October of 2008, every single one of those people that I knew, with the exception of Rick and a handful of other people who were smart, they all got wiped out. All of the money that they made and that incredible super cycle, as you call it all disappeared and they all got wiped out. I don't remember off the top of my head how much gold fell and how much oil fell from June of '08 to the bottom of October, early November '08, but it was a lot. And it wiped everybody out. I remember there was one guy who was a famous banker who would always come to the Jim Grant conferences that entire period and preach the gospel of gold. And he was taking his bank deposits and buying gold with them. And so he had a gold-backed bank in Georgia. And he killed himself because he was invested in all these junior mining stocks that had gone up so much and then they all went to zero. And there was another guy who shot himself in the Galleria parking lot mall in Houston. And that guy was a friend of several of my friends. And I remember calling Doug Casey up on Halloween, October 31st, 2008. And I didn't think that Doug was the kind of person who would kill himself over a financial loss, but I was concerned. And I called him and I said, "Doug, how are you doing? Have you put the ammo somewhere outside of the range of the shotguns?" And he said, "Oh, Porter, my portfolio looks like a medieval battlefield at dusk. There's parts and pieces strewn everywhere." So, I admire the people who who invest in those spaces, and I love hearing the stories of the deals, when they fly into Colombia and they buy a coal mine or a gold mine or a silver mine for pennies, and they spend the next 12 years extracting value out of the deal. I admire all that. But man, you know what I did in 2007? I bought Hershey at 12 times earnings. And since then, my wealth has compounded in Hershey by about 15% a year. And I haven't had to think about it one goddamn time. And the maximum drawdown volatility in that stock during the global financial crisis, the maximum drawdown was about 20%, which is something even I can live with. So my advice to people is something very contrary to what most of your guests probably talk about, which is fuck commodities. You don't want to fucking buy commodities. You want to sell commodities. And you want to sell commodities wrapped in a brand where you can command a very high price for your cocoa or your silver or your gold. You want to invest in commodities? Buy Tiffany. I remember in February of 2009, I recommended an investment in Tiffany at $24 a share, which was less than the value of the company's inventory. You got the brand, you got the earnings, you got all the real estate for free. So you want to buy commodities, I think the way to buy them is wrapped in a brand. And, maybe I'm wrong about this, but I don't think there is, maybe I'm wrong about this, but I think the Warren Buffett approach to finance is more attractive than the Rick Rule approach to finance. And I'm not saying that Rick isn't a great investor. He absolutely is a great investor. And if Rick says, hey, Porter, I'm going to have a partnership to buy uranium, trust me, I'm in. But I think that for most people, the trick to being very successful as an investor is just not that hard. Just wait until you see a business that you can easily understand that's trading at a price that is so obviously below its intrinsic value that you don't have to even run a discounted dividend model. You just know it's got to be too cheap. I'll give you one more example. I just read a great book. It's called Warren Buffett's Early Investments. I highly recommend it to everybody. And in 1966, after Walt Disney had launched the park in Anaheim, California, so Disneyland had already opened and was making money, was profitable. And after he had launched, I think, 120 different movies. Now, most of them were just short films, but he had a whole movie library. Buffett was able to buy 5% of Walt Disney for a market cap of $80 million. And on any kind of valuation at all, the firm was worth at least $300 million at the time, based on its land holdings and its earnings. If you can just do that once or twice in your lifetime, you're going to be very, very well off.
Yeah, those are some great words of wisdom, and I like hearing the contrary opinion to what most of the guests on this show say. So that's very fascinating. A lot of food for thought there. I want to end on the BRICS versus the West narrative, where you see that situation headed. Obviously, we talked about Trump and tariffs earlier. Do you think these threats he's putting out there are going to kind of rein them in? Do you think it's going to accelerate their cooperation? And as a follow-up, do you think there's any opportunity in the stock market in some of those countries, in China, and, Argentina's not a BRICS member, but potentially might be, places like Brazil, emerging markets. Do you think there's any opportunity right now? Because at the moment, I think U.S. stocks globally make up 60% of all global stock allocations, which seems fairly high. So would love to get your thoughts there.
Yeah, I'd say so. Yeah, I like that comment. Fairly high. It's like me saying this will be fine. Yes. So I think that we are at a really important peak in the dollar valuation. I don't think the dollar has been this overvalued in my lifetime. You can make an argument about the 1985 period before the Plaza Accord was reached. But look, the dollar is where's the Canadian dollar now? 64 cents, 62 cents, something like that. I mean, it's just gotten completely wiped out. Same thing was when I was in New Zealand. When I was in New Zealand, we were everything I bought in New Zealand was higher quality than I can get in the United States, and it was half the price. because of the strength of our dollar. So if you have the ability to buy foreign real estate with dollars, if you have the ability to buy foreign fixed income with dollars, if you have the ability to buy foreign high quality equity with dollars, I would highly recommend doing so. I mentioned earlier that I think right now, as much as I love Hershey and have been a long-term Hershey shareholder, I would certainly think that today Nestle is a better buy because of the strength of the dollar. I agree with all that. Where I would quibble with you is that I've been in finance now for over 30 years, and emerging markets continue to emerge. If they were actually emerging markets, then surely at least one of them would have emerged by now. So I don't think that going out and buying a whole country ETF is likely to be a winning strategy over the long term. Now, let me qualify all that, right? When you get a situation where Argentina as a country is trading at 3 times earnings, yep, that probably is going to pay off. And in terms of countries, I'd be particularly bullish right now on Colombia. Colombia had gotten completely cheap because it had been ruled by a socialist. They're going to throw them out, and there will be an increase in equity valuation like there is now in Argentina. I don't know enough about Brazil's politics to tell you where they are in that cycle, but certainly if you can get good at trading that cycle and you don't mind trading, that's a very viable way to go. I'll tell you also, I think probably very underrated as a country is Mexico. Everybody talks about China all the time, but look, Mexico now has a higher per capita GDP than China does. And that they've closed that gap in the last 6 or 8 years. I suspect that Mexican valuations are going to get smashed if Trump does any kind of this tariff stuff. And if you look in Mexico, you can find very well-run businesses. Walmart de Mexico is a very, very well-run business, for example. Probably has higher growth, higher returns on invested capital than Walmart in the United States. And I don't know, I'm not from my Bloomberg, but it's probably trading at half of the valuation of Walmart in the United States. So there's a lot of interesting arbitrage that could go on right now if you were a thinking investor. And as I said, my oldest research colleague and I, David Lashman, just got together. We put together a portfolio of just 6 stocks, all based on basically foreign stocks. The only stock that wasn't foreign was ExxonMobil. And of course, if you think about it, oil is kind of a foreign currency as well. It's something that, is cheap because of how strong the dollar is. So yes, I suspect that you will see a reversion to the mean and dollar valuations over the next 5 years. And if you have me back on in 5 years, I suspect that Colombia will have done very well. Mexico will have done very well. Argentina will have done very well. And a lot of the mega cap, high quality European companies that have just been completely shellacked will have turned out to be great investments relative to the S&P. I'll also tell you that I suspect, and this is just a guess, but I suspect that the S&P 500 will average over the next decade less than Treasury bill returns. So I think you'll make more money in U.S. Treasury bills over the next decade, at least on a nominal basis, than you'll make in the S&P. I think the S&P is overvalued to the extent that it was in 1972 and 1999 and 2008. I think it's probably more overvalued than any time I have ever seen, going back all the way to maybe the railroad boom of 1844. The CAPE ratio, that's the cyclically adjusted PE ratio of the S&P 500, is now at 37. Some people call it the Shiller PE. It's a way of looking at the market multiple over a 10-year period and saying, hey, over the last 10 years, we've had these amount of earnings. What's the S&P worth? And it's worth 37 right now. And a lot of people make a very good point, which is that the COVID debacle took like 2 years out of that 10-year earnings cycle. And so the Shiller PE ratio may not really be what it looks like just because we're missing 2 years worth of earnings because of COVID. And I think that's a valid point. I do. But I also think that even if you adjust for that, okay, let's say it's only trading at 30 times instead of 37 times. It's still more expensive than any other time in stock market history, with the exception of 44, 29, and 2000. So I just think it's, I don't think it'll be different this time. I think, I think that capitalism will continue to function as it has, and that these companies that are woefully overvalued will see their valuations shrink, even if their sales and earnings continue to grow.
Well, this has been a fantastic conversation, Porter. Really appreciate you coming on the show. Could you tell us about Porter & Company and Porter's Daily Journal for those who want to hear more from you?
Sure. So my career is pretty simple. I started my first company in 1999 when I was 26 years old. And I built that up for 22 years and sold it and retired from that business in 2020 and had an equity sale in 2021. That business is now called MarketWise. It's publicly traded on the NASDAQ. And it sounds really good. We had a $3 billion valuation at our IPO. What no one will tell you is that I actually didn't get a single nickel out of that transaction. It's a very long story, sad story. If anyone's an entrepreneur and they're thinking about selling their business, my best advice is make sure you get your own lawyer. And I did not follow that advice, and I was very sorely treated in that transaction. So in response to being defrauded in that deal, I started a second company, which is called Porter & Company. And that business has now been going since 2022. And we're up to about 40,000 customers, which is pretty good for an independent financial research firm. I've got about 40 employees, including some real legends in finance. Marty Fridson has been doing distressed debt analysis since he invented it at Salomon Brothers in the 1970s. He's in his late 70s, and nobody knows more about distressed debt anywhere in the world than Marty Fridson. He's on our research team. We also are now joined by a guy named Erez Kalir. And Erez Kalir studied medicine at Stanford, got a law degree from Yale, was a Rhodes Scholar, studied medicine again at Oxford, has been a biotech VC for the last 15 years, and is now writing about biotech for us at Porter Company. So a guy who really knows his stuff. He was also a money manager for Julian Robertson at Tiger. He was one of they called him the Tiger Cup guy. So he managed $1 billion at one point for Julian. So certainly a guy who knows his stuff. And I'd like to think that I know what I'm talking about too. So the three of us I do sort of core investing. Marty does distressed debt, and Erez does biotech. And the track records of these guys are just ridiculous. I think since we started, Marty Fridson has an above 30% average return annually in fixed income, which is just insane. And last year, Erez picked 3 different companies which more than doubled, including one stock that he made more than 100% on twice. So he knows his stuff. Anyways, if you're interested in any of that work, we have a free email you can try, no obligation. It's called portersdailyjournal.com. You can go sign up at portersdailyjournal.com.
Great. Well, I'll put that link in the description below. Thank you once again, Porter, for coming on and sharing your knowledge with the audience.
I had a great time chatting with you. Thanks for having me.
And thank you for joining us today. This episode is brought to you by ARC, silver, gold, osmium for all your precious metals needs. Head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.